Good afternoon, everyone. Jason here. Today is July 26th, and this is your aftermarket update. So if you have spent this week in here with us, Monday, Tuesday, specifically, of course, if you were in there today, you saw a really nice trade. Monday and Tuesday, I was having a difficult time getting my bearings together on the market. A lot of that had to do with some of the fundamental news that was coming out, particularly yesterday. There was OPEC meetings, there was the API report, there was a few things that had me going in the opposite direction of what the market was actually doing. And so when that happens, we have a mantra that we live by in here, and that is cut your losers short, let your winners run. And so we were having difficulty getting those winners to run to targets. We actually would get into a position and it would work for a few minutes, and then it would come back and take us out of break even. Then I would try it again, and I would take a losing trade. So that kind of pattern and process repeated itself Monday and Tuesday. But the benefit of what we do in here is we try to teach you how to think like a professional trader versus a retail trader. A retail trader goes something like this. The retail trader goes small winning day, small winning day, small winning day, big losing day, wipes out all the small winning days. Whereas we flipped the paradigm, or we flipped the script in here. We go small losing day, big winning day like we had today, and big winning day like we had Friday, erases all of the losing and then puts you ahead. And that's exactly what we were able to do in here today. I'm going to tell you about the entry that we got into. I'm going to show you a couple of the reasons for the entry, and then I'm going to show you the trade as we always do. So first thing I want to do here is I want to show you this this red dotted line here, 48.70. This represents a sweet spot retracement area. So if you are familiar with the offer that we give you for $47, this setup is in that $47 offer. It's represented here by this red line here. So I think it's fair and necessary to tell you before we got into this trade, I had a small winning trade right before the inventory announcement. And then I had a small losing trade. It's my first attempt to get into this short. Actually swung me out up here at 87. And then we get back in short here at the sweet spot of this retracement. Let me show you this as well. Here was the secondary reason, one of the secondary reasons to get into this trade. This is your hour chart. And if you take a look back here, you had this naked point of control going back all the way into... Really, this naked point of control was going all the way back into the 31st of May. And so you could see that the market rallied right up into that naked point of control right up here at 82, 83. Right at the end of May, there was that naked point of control, and that really gave you some resistance. So as the market swept up into that area, it came back down again. That is when we were also looking to get short here at our favorite retracement spot. And then we had one other idea as confirmation here. We had gotten into, so I'm going to turn off for just a minute. I'm going to turn off these revision signals for just a moment. You can see that we came up to within ticks of that structure target, right? So we talk about kick the signal, pay the target up here, and that's exactly what the market did up there. Got within 4 or 5 ticks. Again, we talk about the fact that it's less about precision and more about zones of influence on support resistance. And so this resistance area, we did kick the signal, pay the target. We came back down here underneath this 58. And so these three ideas together, we had the sweet spot at 70. That's the first time I took it, I got swept out. Then we rallied up here to within a few ticks of the daily structure target. Then I get short again underneath that sweet spot of our retracement there at 69. And then we took the market to the downside. Now our target down here today, you're going to hear me say, you're going to hear me on the, when I show you this video, you're going to hear me tell you the target is down here at 09. And that's right where we came down here. That was right at the revision signal. So we got within, again, within ticks of the revision target, kicked the signal, pay the target. Actually came right down here into the revision target again. We kicked the signal and paid the target on the other side, all in just a few bars. My target was this revision signal right here at 09. And that is where we sold off down into. So one other thing on this market maker level, these things did just exactly as you would hope that they would do here today. In fact, if you take a look at where the market ended up, we got really close to that high. But if you look right down here, the market spiked right down into your daily structure signal. So we got within mere ticks of the target. We came down here to the daily structure signal. In fact, we got to 86 on the low, and that was your daily structure signal, and then the market rallied. Spent the better part of the time rallying. And I know that I did not take it. I'd had 120 tick trade here, so I did not take this trade down here, but I know people in the room that said that they did. And then I know one, I think Patty, as a matter of fact. Patty, if you're listening, hello. You were looking for your target up there around 80 today, so she got it both ways. I did not, though. So just in fairness and for the sake of pure transparency, I did not get into the long there, but I know that Patty did. So anyway, that is what we did today and why we did it. I'm going to let you watch this trade of the day video. It was a 120 tick trade, holding on for the target video. The risk reward on it was 3.7 to 1. If you have spent any time watching our videos here, you know that we talk about risk reward. We show you that algorithmic spreadsheet that we use and as a calculation for how to determine and running scenarios and those kinds of things. And so I'm not going to spend time with you here, but just search through the YouTube channel or the videos here on the site, and you'll be able to find more information about that algorithm and why a 3.7 to 1 risk reward puts you into a really nice category in terms of being long-term consistent. So I'm going to let you watch this trade of the day video. As always, I've cut the video down into pieces, sped it up, put some music behind it, and hopefully you enjoy it. So without further ado, here is that OTG trade of the day. And I am in. The stop here is, the stop right now is the stop for now is 88. The target is 14. 9. The target is 9. All right, so you can see that once we got through, that's the entry to break even. Once we got to break even, the market really unhooked very quickly and finished our move up all the way down to the target. It was 70 was my entry, 70 down to 09. 61 ticks times 2 is 122 ticks on that trade. So $1,220 on that trade, and that is the way we would like to see it happen every day. Of course, holding on for targets is not easy, but when it does pay off, it can make everything right like it did today. So again, as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.